The material discussed in this program is for information purposes only. It is not intended to be used as a recommendation for investing or as legal advice. Each person has his or her specific situation, circumstance, and objective, and should consult their own personal advisor or counsel. Thursday morning on KSJE, it is time to check in on the economy. J.C. Calcote is here from Citizens Trust and Investment Corporation to do that for us. J.C., good morning.
Good morning.
Thank you for being here. So what's going on? The Fed had another meeting?
They did. They met about 3 weeks ago, but they released the minutes.
That's right. Okay.
Yes.
So now we know a little bit more about what they were talking about.
We do. They released the minutes of the meeting. They decided to keep interest rates low, if you'll remember. And in the meeting, they also mentioned that they are going to... by the end of 2019, they're going to end the reduction of bonds on the balance sheet. So we've heard about them kind of normalizing the balance sheet.
Right, okay.
If you'll remember the financial crisis, 2007, 2008, the Fed lowered interest rates to almost zero.
Right.
And there really wasn't any effect on the economy. It didn't really do anything to stimulate the economy.
Right.
So their next plan, which was kind of drastic, really, they decided to go into the open market and buy up a bunch of treasuries and mortgage-backed securities.
Okay. Is that this quantitative easing that they called it back then, right?
Exactly.
Okay.
So the idea behind this was you're going to buy these in the open market. Most of the owners are things like big banks.
Mm-hmm.
And the idea was that the cash flow from taking these securities off their hands was going to be used for lending and to kind of reinvest in their own company. So they're going to be lending money. They're going to be reinvesting, maybe creating jobs in their company.
All right.
And it worked.
Sounds like it makes sense, and it did tend to work, right?
And it worked. And
but now they have all this stuff on their balance sheets, right?
Exactly. So, you know, their balance sheet really jumped, and now they're trying to get it back to normal levels before the financial crisis, really.
So they're selling these things? They're selling them back to the banks? Or what do they do?
They're selling them back to anybody
that wants them.
Who wants
okay.
them. Yeah. So yeah, that was a big piece of what they talked about. And then they also mentioned again and again throughout the minutes that they're taking a patient approach to interest rates.
Okay.
So, you know, we've got the economy pretty healthy. We had the stumble at the end of the year last year,
right,
in the fourth quarter. But really running and gunning again, one of the biggest Januaries in history, doing well right now. And so this patient approach, they really said that the interest rates are going to be tied to inflation. The weird thing about that is inflation is low right now.
Right.
So a lot of the analysts are really thinking that although they mention it's tied to inflation, they're really, if the economy keeps going the way it's going, we're probably going to see a rate increase towards the middle of the year, even if inflation is still in check.
Gotcha. Because they're just still pretty low, right? Traditionally, right. I mean, they're just I don't know where they are. Four.
Well, there's
yet?
about two and a quarter, I think, or 2.5 right now. So then they get bigger as they go down, but that's what the central bank is.
Okay.
So really low, like you said, historically. They've got a lot of wiggle room. They left themselves a lot of room to work with.
Right. And I assume every time we hear this and talk about this, that they want to get those interest rates back up a little bit higher, so that if there is another financial or economic crisis, they can drop them again to do what you say it did last time, or try to do, or help to do.
Stimulate, try to get those interest rates low so people start borrowing again.
And with 2%, they don't have a lot of wiggle room down.
Not at all. No. So we'll see how that works. But the market had a positive reaction. It was a slight gain, but we've been on really, I think, an 8-day run right now of positive numbers for the market.
Okay.
So doing well. People are still kind of hung up on the last quarter of last year.
Sure. Right.
But I mean, if you look at the numbers, the S&P is up 18% from the lows in December, and is actually only 5% off the highs in September. So we're back to above where we were at this time last year.
A year ago. Right.
And inching closer to those highs. So it's really recovered fairly well after that stumble in the fourth quarter.
Gotcha. All right. Tell me about oil prices. How are they doing?
Oil prices are doing well. We can actually say they've been on a little streak. Yeah.
All right.
They rose for the 6th straight trading session, so 6th straight day that oil prices were up yesterday. And it's the highest finish in 3 months. So we're, again, gaining some ground there. We see some signs of a tightening global supply. OPEC came out, in their last meeting and said that they were going to cut production. And now we've also had Nigeria's come out saying that they're going to considering cutting prices. And then the Saudi company Aramco, has said that it's actually going to close one of its plants that produces 400,000 barrels a day for maintenance. I mean, temporarily.
Okay, I see.
But again,
that'll hit the supply.
Is going down. Yeah, exactly.
So where are we price-wise? Are we still around 50-something?
Price-wise, we're about $52.50 per barrel.
Okay.
So, oh no, I'm sorry. In the last month, we've risen from 52.50 per barrel to almost 57.
I see.
So we've gone up quite a bit. I mean,
Okay.
it's really recovering. It's flirting with 60 again. So oil's in a healthy spot right now.
All right. Natural gas, not so much.
Can't say the same for natural gas, unfortunately. It's about 268 right now, which is really where we hung out all last year. If you see the chart from last year, we were really around that 250 to 270 range.
Right.
There was a big spike again in the fourth quarter.
Yeah,
So lots
I
of
saw
strange
that.
things going on in the fourth quarter last year. But really kind of hanging out in the normal range for natural gas.
Okay.
And then gold, you could say the same. It slid a little bit yesterday. It's at 1,336 an ounce.
Right.
Which is where it was at the beginning of last year. It did dip in the middle.
Okay.
But again, kind of getting back into that normal range. So stuff we like to see. Really.
Interesting. Okay. Very good. Well,
Yep.
let us know what happens next week.
All right. Sounds good.
Okay. Very good. Thank you. That's J.C. Calcote from Citizens Trust and Investment Corporation. He is with us every week to talk about the economy with me right here on KSJE Farmington.